Today, I simplified the ICT 2022 mentorship model in 3 easy steps. You do not want to miss this. This is very easy. It's a repeatable process. Market structure shift, fair value gap, retracement, reaction, entry, and you set your stop loss and take profit at a 1 to 2 risk reward. If we look at these simplified examples here, we have a bullish market structure shift, we have a bullish fair value gap, we retrace into the bullish fair value gap, we react off of it, we enter, set our stop loss below the reaction point, and we set our take profit at a 1 to 2. And on the bearish side, we have a bearish market structure shift, a bearish fair value gap forms, we retrace into that gap, we react, then we set our stop loss off the reaction point high, and we set our take profit at a 1 to 2 risk reward. Now let me show you guys a real example that happened recently on gold. Now if we look here, we have this high. If we look here, we have this low breaks this high. So that means we have a market structure shift. So we draw out our market structure shift. After the market structure shift, we form a bullish fair value gap. So we would mark out our gap. Now when price retraces into this gap, we look for a reaction. We get a reaction on this candle. We get a bullish reaction, so that would be our entry. We'd enter around here. We set our stop loss below the reaction point, and we set our take profit at a fixed 1 to 2 risk to reward ratio. And as you can see, that would hit fairly quickly. Now this is only one example. There are multiple examples across the chart, tons of data. I recommend you go back test and forward test this. But this strategy just simplifies ICT concepts. A lot of it's really too complex. So if it's too complex for you and you want something that's simple and very easily repeatable, this is for you. It's a 3-step process. It is very easy. If you guys like this video, make sure to like and subscribe, and I'll see you guys in the next one.